Morning, everybody. This is Jim Collins, Excelsior Capital Partners, the Rising Series podcast. Today's episode, I have David Schulhof, who is the CEO and founder of the MUSQ ETF, which is stock ticker symbol, as you might guess, MUSQ. So this is something that anybody who's watched any of these videos knows how much I love music, and I have had the good fortune of meeting David at several of the millions of investment conferences I attend. And we decided that we should get together and talk more about music as a business and MUSQ as an ETF investment, which has been a terrific performer. But with that, I don't want to take up too much of David's time, so I will turn it over to him to introduce himself.
Thank you, Jim. David Schulhof. I'm the founder and CEO of MUSQ. We are the first pure play music exchange traded fund.
That's great. And so I've helped some of my friends create sort of sectoral thematic ETFs in some very odd kind of industries. So I have some experience with it, but maybe for my viewers, please go through the mechanics of an ETF, the way it works with your the index upon which you're based, the sponsorship of it, how I can buy it, Robinhood or whatever, all those sorts of like very basic details.
Right. So MUSQ trades on the New York Stock Exchange under the ticker MUSQ. The ETF tracks the performance of the MUSQ index, which is an index I created that captures the global music industry. So we have roughly 40 holdings in the fund across streaming, content, live music events and ticketing, and equipment and technology. This is a rules-based index. It's passively managed. The fund gets rebalanced quarterly, and 80% of the holdings in the fund are pure play music companies. 20% are diversified or non-pure play. Pure play companies generate more than 50% of their revenues from music. Diversified companies generate more than 20% of their revenues from music. So it's an 80-20 split. No single weight can be greater than 12%, and no company can be smaller than $100 million in market cap. And so this creates a nice cross section of small cap, mid cap, and large cap companies. About half the equities are foreign equities and half the equities are domestic. We have companies in the fund from South Korea, from Taiwan, from Japan, from China, all across Western Europe, and of course in the US. And it's a great way to invest in a diversified way across the entire music industry ecosystem, which is growing at a very accelerated pace currently.
Okay, and maybe you could walk us through the actual rebalancing process of the fund itself, which I believe just happened. It's the 1, 4, 7, 10 months, if I'm not mistaken. So in October, what happened to the fund in terms of its constituents, and how do you do that?
Right. So the fund gets rebalanced quarterly on the third Thursday of every quarter. Mm-hmm. And if any companies exceed 12%, they would get rebalanced and come down so they can't exceed 12%. And we need to make sure that the companies are in line with the index.
Of course, yeah. And it just for and again, I would tell people that just with every CEO I talk to, I mean, the best place to start is always the website, which in this case is musqetf.com. So I'm looking at that on my other screen, and I'm seeing Universal Music Group, largest holding 9.6%. Spotify, Live Nation, close to 8.5%. Then Alphabet, which is obviously the parent company of Google, and on down the list. So I guess the question is how much sort of, we've all gone through actively managed ETFs like Cathie Wood ARK is a famous one. How much individual decision-making process do you have, David, or control over it in terms of what is in there?
So I created the index. So we back tested the product and bull markets, bear markets. We determined the eligibility requirements for new companies. We set baseline market cap. There are certain minimum liquidity requirements too. They have to have average daily trading liquidity of a minimum of $500,000 a day. And we created what we think is a very compelling index. As I said, that's been back tested through very strong markets and very weak markets, and it's a very uncorrelated fund, so it's not really swinging with the tides of the broader markets. In fact, for most of this year, we've actually been outperforming fairly substantially the major indices like the SPYs and Qs. The companies in the fund are not really impacted by tariffs, and so it doesn't have the same exposure. So we think this is a very compelling, diversified, uncorrelated investment strategy for people who want something different.
Okay, yeah, and I'm seeing on my other screen, Yahoo showing 22.51% year-to-date return, which is excellent. And so congratulations on that. Also, some of these companies, Google and Apple, obviously, which is also in the top 10, do pay dividends. So how do you manage the dividends that you receive into MUSQ and how you distribute those to shareholders?
Yes, we pay a 2% dividend that gets paid out at the end of the year.
Okay, so that's a one-time annual payment.
Mm-hmm. Yes.
Okay, and also getting through the boring stuff here because I really want to talk about music, but its net asset value is about 23.5 million that I'm seeing, 860 shares outstanding. Those are correct?
860,000 shares outstanding. Yeah, I think, the last week saw some volatility. Yeah, we were more like 26 million, 2 weeks ago. I mean, we hit a 52-week high of, I think, 31 or close to 30. So that would have been over 26 million, 26.6 million. So now, yeah, there was some of the, obviously, the last week's been very volatile for all the markets. And so we've come down a little bit, but we had no redemptions. And so I expect the fund to be back where it was at 26 or 27 million of AUM shortly.
Yeah, that's, I think it is an extremely attractive industry. I know that in your corporate presentation, which I believe is also on your website, you go through a lot of the Goldman Sachs research that they did, which I think is excellent as a former sell-side research analyst myself. And just the breadth and depth of growth in music on a global basis is impressive. And maybe at that point, I should get you, David, to talk about your personal background or professional background a little bit, and how you got into this. Yeah.
Yeah. So, okay. So to address your first point, look, music is a very compelling investment. I encourage your audience to kind of read the Goldman Sachs report, Music in the Air report. The industry's doubling from 100 billion to more than 200 billion over the next, 5 to 6 years. A lot of that is driven by the growth of paid streaming subscribers going worldwide, going from 800 million to 1.6 billion. And so we're in a massively accelerated growth period right now, especially in the emerging markets where streaming, is growing like 25 to 50%. Even in this country, it's growing at, 10 to 15%. And so, at a macro level, just with the growth of paid streaming, that's moving very quickly. And then you have the growth of live music events and ticketing, big tours that are generating a lot of income for all the companies like Live Nation and CTS Eventum, from Taylor Swift to Beyonce. So everything is, and then you have the erection of new stadiums like Sphere in Vegas. And so everything is moving, is growing. And this fund captures all the growth and innovation of the whole music industry. To answer your second question, I've been investing in music for a very long time, for more than 30 years. I've run a number of public and private companies across recorded music, music publishing. I've been a soundtrack producer for a long time. I'm a well-known music producer, having produced over 100 soundtracks. I've owned a lot of different music companies, everything from Bill Monroe to Death Row. I had a company called Evergreen. We owned all the rights to MC Hammer, a lot of Michael Jackson songs,
Wow.
Joe Cocker, J.J. Cale, Bill Monroe. It was a big portfolio that I sold to KKR in 2010, which became BMG Rights Management. So I've been investing in this space for a long time. What I wanted to do, Jim, was really build a great product for retail investors. I felt like you wanted exposure to the music industry for a long time. Look, at a very independent level, you invested in your buddy's maybe record company. And if you were a family office, you were an LP at a big private equity firm. There was no liquid, convenient, transparent way to invest in music. And so my goal was to design a product that would kind of really give investors excitement and exposure to the music industry. So that's why I created MUSQ.
Okay. And do you think that, I'm always reading these stories about, I'm a big classic rock fan, as we've discussed, but, they might be the types of entities that now would be selling their catalogs, maybe like private equity. Do you think that as a sort of retail investor, do you think it's easier or more difficult now to get real exposure to the music content that we all love?
If you're a retail investor, is it, sorry, can you ask me your question again?
Oh, no problem. I'm just, these are billion-dollar transactions. So I'm just, wondering if it's really being democratized. Is it easier for me to invest in music than it was 10 years ago? And obviously I know that's why you created the ETF, so I get it, but I'm just wondering in the big picture.
Yeah, you want to have a diversified approach. There's too many companies today, too many public companies. There's too much moving too quickly in the area of AI, blockchain, music publishing. You really want a holistic view. You wouldn't want to put your money as an LP in Blackstone or KKR or Apollo. Then you're just kind of limited to the deals that they do. You kind of want to be totally diversified, and look, companies are not in the billions; they're in the trillions when you add up. Because we have, Apple, Amazon, and Google in this fund too. Because after those are diversified or non-pure play companies that are included in the fund. Because after Spotify and Tencent Music Group, they're the third, fourth, and fifth largest streaming companies in the world. And so you want to have exposure to all these companies if you want to bet on the music industry.
Absolutely. And that's, again, the level of control that they have is, but I shouldn't complain about it because I host these videos on YouTube and I use a Google Pixel phone. And I also have in front of me a Google Chromebook open. So it's sort of like we're giving them the power. They're not taking it from us.
Yeah.
And you talked about emerging markets. All my viewers know I spend a lot of time in Brazil. That's where more than half my assets are these days. They love Spotify, as they say down there. Do you think that it will be the big tech players, and Spotify is big, that end up controlling that? Or also, I know you've worked with some Korean companies as well and invested there. Are there sort of players that we don't know about here in the States in global music? And how is MUSQ invested in that? Sorry, long question.
Oh, look, so we scrape the universe for music companies worldwide that generate more than 50% of their revenues from music. We also scrape the universe for companies worldwide, generate more than 20%, or more than 50%, and more than 20%. And if they become eligible for inclusion in the fund, then we're going to include them. So we're looking at companies in India, in China. We have a company called HIM in Taiwan that, is a huge music company. So we're giving investors really good, broad, diversified exposure.
Yeah, I think that's important, that to differentiate yourself as, not just a big tech, ETF, although obviously, you have Alphabet, Amazon, and Apple. You can't avoid them, but I think that's something that you are offering that isn't so apparent. Is the ability to really play these other angles of music. But is that something you think about, or your board at all, David? Is sort of, we don't want to be too much of a big tech ETF because there are many of those already.
Yeah, we don't want to be. We don't want to be. Look, we have obviously companies like Spotify, Apple, Google. We want some tech. I mean, we are kind of a music and tech fund. There's nothing wrong with tech. It's hard to be in the music business today and not have exposure to tech or AI. So we want to capture the growth in all the different verticals that I mentioned. And there's simply too many companies today that are public, that are becoming public, to pick one or two. I mean, why would you just pick Universal Music Group to invest in? You're not getting exposure to all the artists on Warner Music Group, on Sony. You're not getting exposure to the K-pop companies. So, you really want to have all of them.
Oh, absolutely. And I think that there are ways to. What do you think is the next horizon, David? What's the next way to monetize this content that nobody's even thinking about yet? Is it AI or not?
Sorry?
Do you think that, I'm just wondering what when you look at these companies, what do you think the best way for them to continue to monetize is?
Well, with Spotify, they want to generate new paid streaming subscribers. I think that's important. Same thing, Apple and Amazon and Google, as far as their music services are concerned, we want them to grow with paid streaming. Live music events and ticketing companies, they're producing massive tours, right? Whether it's the Eras tour or the or the Cowboy Carter tour. So they're going to continue, to generate big tours.
Yeah, I mean, I see absolutely zero evidence that that's slowing down. In fact, I think it's actually accelerating, and the Goldman Sachs report would confirm that. Also, just wondering in terms of the way that we're bringing content to people. I know we talked about this before, and I have not been there yet. But something like the Sphere in Las Vegas is an MSG product. Do you think that will continue to evolve, and that there will be more sort of holistic three-dimensional facilities, which would make for interesting stock play?
Yeah, look, Sphere's been a great company. You're going to see a lot more experiential, live music companies like that. I mean, they had an incredible year with the Eagles. They had Dead & Co. They had, So we want, we added recently a company called Venue, which is producing kind of high, kind of high-end kind of music venues. So we think the music experience is only going to grow.
I think that's an amazing one. Not to take up any of your time, but I do know JW Roth and the Venue team, and just the sort of the fire pits, the whole experience of going to see a show. There's so much upside there, so much incredible amounts of upside. So what music are you listening to these days, David?
Oh, I listen to everything. I mean, from rock to pop to R&B. Oh yeah. No, I love like Tyler Childers, Zach Bryan, Zach Brown. Yeah, I like country. I like country music. I like hip hop music.
So that should probably be Dakota, which Led Zeppelin album. But I may have to try to get a Death Row Records story out of you before we end this, which I would probably have to edit. But trying to stick in the business, in terms of again, I have some friends who do ETFs, and it's difficult for them to get bandwidth in terms of investors, especially institutional investors. So as you've grown MUSQ, what have you found works and doesn't work in terms of getting this thing out there, which obviously is what is going to grow NAV, just more investors.
Yeah, no, I think we have a very compelling product. We're the only pure play music ETF. It's something very different. I mean, I don't know how many 2x, 1x, 5x NVIDIA type funds, leveraged ETF, inverse leverage. There's like thousands of them. We're just one, and we're focused on something really different. And we think it's compelling, and we think investors should add this to their portfolio. You got very big companies in the fund. Where, next year in May, we're launching our first MUSQ conference.
Oh, wow.
So we'll be announcing some guest speakers shortly, but it'll be a great way for our community of investors to come out and listen to the CEO speak. And so it'll be what I hope will be our first, annual music conference. We're excited about what we're doing.
Yep. And also, again, this is kind of the nerdy stuff that really only I care about. But when you were doing the back testing using Vetify, I believe it was, was there anything in that process that made you think we never want to be in a certain subsector, or any kind of red flag?
We don't want to be in radio.
Okay, that's where I was trying to go. Yeah.
We think.
I'm sorry. Please expand on that.
Yeah. No, we think radio is a very disrupted technology. All the companies from Sirius to iHeart are loaded with debt. We don't think they add value into our fund. They actually hurt. We originally had it when we went public, and we had to change the rules to exclude radio. And once we did that, the fund shot up meaningfully in performance. So we don't want to include radio. We think radio is a business of yesterday, and people today they're very focused on streaming and content and live music.
No, I think that what you do not invest in is at least as important as an active asset manager, is at least as important as what you do. So it's good to hear you say that. And, I tend to agree with you in terms of, this is something that I've also mentioned, but, one of the reasons I do this is just some of the exceptional content that's out there, specifically Rick Beato, who is just an incredibly good interviewer. Also, he was in a band. But he might ask somebody who is a fellow musician about experiences they've had. So as a fellow businessman, can I get you to give me a crazy or not crazy music industry story? People think
crazy.
Whatever.
You know what? I produced a movie on Clive Davis. I think he's got the best story. So I think the audience should go and see the soundtrack of our lives. That captures the music industry quite well. It's a #1 music doc on Netflix. I'm the producer of it. I financed it and produced it.
Okay, that's great. I love. We have NYC DOC coming here in the next couple of weeks. I love documentaries, and so that's so. What else should we be watching or listening to? I mean, I think Clive Davis is obviously.
That's great. There's a good, my first job in the industry was working for a gentleman named Jimmy Iovine. Who was a producer with Dr. Dre, and so there was a good series called The Defiant Ones on HBO. That's pretty good too.
Yeah, he was. God, I think I got that, and he produced. I think
Tom Petty, Springsteen, big names, John Lennon.
Yeah, that was one of the docs. God, that must have been like Damn the Torpedoes. I was watching a doc about that, and just the creative process is just incredible. And it's like how did these things end up at the time on vinyl when it seemed like everybody was fighting each other all the time. But I think that's art. So, and then would you? Is MUSQ your main and only focus these days, David, or are you thinking about creating other ETFs that are interesting?
Yeah, well, we're looking at other ETFs, but right now we're focused on building this one. We think this should have $1 billion in it, and and so I'm out there promoting this, and we're just onboarding this now onto different platforms.
Yeah, again, I think that it's there's so much out there that it's just a matter of getting people to pay attention. So yeah, that's. But do you or do you not have a good death row record story?
No, I don't really have any good ones. I mean, it was a great. Yeah.
We'll save that for the next conference. And the cocktail hours are legendary at those things. But again, I think we should wrap it by going back to all the important stuff, which is that ticker symbol is MUSQ. URL for the website is musqetf.com. And are there any other resources, David, do you think people should be using to research this ETF as a potential investment?
Yeah, so we have, on our website, we have the management presentation. We got the fact sheet. You can follow me on LinkedIn.
Okay.
David Schulhof on LinkedIn. You can follow me on LinkedIn, on Instagram, on Twitter, and on Facebook. I post regularly. I would encourage interested viewers to go to our website and just sign up for the newsletter. So you can also get some updates about the conference.
Okay.
We'll be making some announcements about the MUSQ conference. I hope you guys can all come out for that in May. That's going to be just a day of great meetings and panels, and then some live performances and cocktails. And I think that'll be an exciting. And look, we're building a community, Jim. On top of just having an ETF, we're building a music community of avid lovers and avid music investors who really want to learn more and be a part of